we look at what we call the indexes. And the index is nothing more than a basket of a currency versus all other currencies. It is not the dollar yen, it is not the dollar Swiss, it is not the dollar CAD, it is the dollar, or it is the Swiss franc. It is that currency versus all other currencies. So the first currency we're going to look at is the dollar. That's the index for the dollar. And this is the basket of the dollar versus all other currencies. This is pure US dollar. It's against the dollar yen, it's against the dollar Swiss, it's against the yen, the Canadian, the Australian. It is purely the dollar. And this gives us a general picture, or a strong picture, about the dollar, so that we can gauge how we're going to trade it next week. And in our portfolio selection, we are going to buy the strongest of the strong currencies, and we're going to sell the weakest of the weak currency. I always, since I'm buying the dollar yen, I want to buy the strongest of those two pairs. I want to be selling the weakest of those two pairs. So I'm doing the indexes first, so I can identify the strength or weakness, and the strongest of those pairs and the weakest of those pairs. So looking at the dollar index, as you can see, we have a structural point, which is the 8103, and the 8103 has been a very important point, or a focal point, for the pound, for the dollar index, because it has always been the start of very big moves to the upside. You can see here has always been a start of a very big point. You can see this move to the upside. You can see this move to the upside from this is your 83, 81, and you can see the move. It took it till 91, and once it broke it over here, it took you all the way down, or it took us all the way down to the 75, and then when it came above it here, it took it all the way back again to the 91. And lately, this was lost a couple of weeks ago, and this what was the big move from the 81. Now, after this move, and the way we identify the structure point is part of the stuff that we train in the classroom, in the course. But again, the nice thing about a structure point, you can always see it acting in a way you expect it to act, and that is where it has held this week. So this week, the low that we had for the pound, for the dollar, is 8107, which is pretty close to the structural point, and we have rebounded above from the 8103, and we closed the week at 8164, which is a positive close. This is a good sign for the US dollar, because it has bounced off that low, and you can see it more clearly on the daily chart. This you can see how long or how good the 81 has held, and we have bounced above it. This here is a buy signal for the US dollar. So we do have a buy signal for the US dollar, and that buy, it has also bounced above the 8103, so that is a good sign. Now we're going to look at the other currencies. We know that the other currencies, for example, is the biggest one that had a lot of action last week was the Japanese yen. And of course, you can see this is the daily chart for the yen, but we always start looking at the weekly chart. And as you can see, this is the sell-off that we had last week from the intervention of the Bank of Japan. And we already now, as a result of this intervention, we do have a minor sell signal. It is not yet a strong sell signal. The strong sell signal for the yen is going to be below the 1.1547, but we do have now an initial sell signal in the yen, so I do not want to be too eager to buy the yen for the time being. I'll be more cautious towards selling it, and we already have seen that we have a buy signal in the dollar. So I have a buy signal in the dollar, and I have a weak or a fairly weak sell signal in the Japanese yen. If I look at the Australian dollar, this is the index, the Aussie index. As you can see, we closed the week at 92.60. We are way above the structure point of 91.43, and we have closed the week at 92.60. This is quite strong. We have no reason for the time being to sell the Aussie dollar. The Aussie here is still strong. It is still a buy. If I'm looking at something with regards to be buying it, I would be interested in buying the Aussie. So this is on a weekly. I'm going to go down to the daily. I just want to see if there is anything on the daily chart that would give us a caution signal. As you can see here on the daily base, for the last week or so, we have been making several attempts. The Australian dollar has been making several attempts to go higher, and it has been failing. And that close that you see on Friday, this is the Friday close, that is quite a negative close. This is quite a bearish close. So on the weekly, I really don't have a sell signal for the Aussie, but on the daily I have several sell signals that has taken place. So this is one sell signal, this is the second sell signal, this is the third sell signal, but they are all contained still within the weekly range, so we don't have the breakout to the downside. So in this case, we are going to be cautious about the Australian dollar, and we are going to say if it trades, if the Aussie dollar, the index, comes and trades below 9232, then that will be my first sell signal. So as long as the Aussie dollar is above 92.31, I will be still looking to be a buyer of the Australian dollar. Okay, so the only currency so far that has a well-defined buy signal is the US dollar. The yen has a definite sell signal. The Aussie is a minor sell signal. So now let's go look at the Swiss franc. Again, this is the basket of the Swiss franc against all other currencies, not just the US dollar. And right here, this is also another sell signal. This has broken below the highs of the last 2 weeks after breaking to the upside, putting a high of 10077. It has turned around and it closed about 100 pips off the high and inside the prior highs, and we had also our initial buy signal should have been from the 100, so that is a major failure, and we can expect that the Swiss to continue going further down. What this says to us, guys, is this: we have a minor sell signal, as I told you, in the Japanese yen, and right here we have a sell signal in the Swiss franc below the 99.98, and these are the two currencies that are being subject to intervention. The Bank of Japan has intervened last week, and the Swiss National Bank has been intervening in the foreign exchange market for the whole of last year, and they have spent tons of money trying to bring down the value of the Swiss franc. Now, with the intervention that's happening in Japan, we have two countries now that they want to bring their currency down. They might be the two countries that will cooperate with each other to push their currencies down, so they can do some synchronized intervention effort to push the currency or their currencies, local currencies, to the downside. The Japanese, like I've written in the blog, you might have well seen that the Japanese government is not looking for any support, or cannot expect any support, either from the European community or from the United States or from Britain, to say that. But the only candidate here that can support them is the Swiss government, because both countries want their currencies to be weak. So in this case, we can see that we do have two sell signals, one in the Japanese yen and one in the Swiss. So these are the two primary candidates for us to short. Then let's go and see the British pound. Again, this is the index for the pound. This is the weekly chart. The pound, we have a structural point at 156.99 or 157, doesn't matter, and we tried to trade above that. We put the high of last week at 157.21, only to turn around and close at 156.18, which is 100 pips or a big handle right below the actual buy signal. So this is also another failure, and you can see it much clearly now on the daily chart. And as you can see from here, when the pound failed to stay above the 156.99, that was the direction of the move. It went all the way down to the 148. So we can expect here again a similar move, because as you can see on this here, we have two sell signals on the pound. One is a failure trade, i.e. trading, putting a high of 157 and then turning around and failing below the structural point and coming down. That is a sell signal. It's a failure trade, and that should lead to a further decline to the downside. Plus, if you look here on this, that is another sell signal. So you have now two sell signals. One is a failure trade, two is a sell signal that we have trading below the prior days. So now we have two sell signals in the pound. So I have a sell signal in the pound, I have a sell signal in the Swiss and in the yen. So let's look at the euro. We always look at the weekly first so that we can gauge this move here on the euro is quite strong. We have no reason now to turn bearish on the euro for the time being. Forget the fundamental stuff, but for the time being we have no reason to turn bearish on the euro. This is still a buy signal for the euro, and we should be looking for a continuation to the upside. Let's see what the daily chart is doing. This is just, it's not a sell signal really, it's not a real sell signal. It is actually a buy signal if you want to look at it. We had a sell signal in the morning on Friday which sold off, and then it came towards the end of the day and gave us a buy signal. So I have a buy signal on the, let's put the cat, I have a buy signal on the US dollar, I have a buy signal on the euro, I have a sell signal on the Swiss franc, I have a sell signal on the Japanese yen, I have a sell signal on the British pound, and I have a neutral on the Australian. So let's see the Canadian here. The Canadian is, there is a minor sell signal. It is weak. I mean, I can look for a further move to the downside on the Canadian dollar, but it is not as weak as the Australian, nor is it as weak as the Japanese or Swiss, or the British pound for that matter. Why? Because this is a congestion area, and it has been in this congestion area all the way from October 16, 2009. It has been moving around on either side of the 95. So that is a congestion area. It is moving sideways, so that push here could be a sell signal, but we cannot expect really a follow through to the downside. All we can expect is maybe a move down to here, and then it holds until it breaks on either side, or we can have a major reversal on the US dollar. Why? Because I'm saying the US dollar, because the Canadian and the dollar are very closely correlated, and therefore you can see that the US dollar will be the one that gives us the primary breakout on either direction for the Canadian. So to sum this up, and I'll just walk you through it again. If you look at the US dollar, you can see that we already have a minor buy signal. On the Australian, it is still strong. If it closed at 26 at 92.60, this is the only one with a serious buy. The British pound, we do have a failure, and we have a sell signal on the weekly and on the daily, so the pound is weak. The euro, we do not have a sell signal on the euro. On the contrary, this is believe it or not, one of the currencies that I will be looking at buying next week. And the Swiss franc, this is a major, on the weekly it is a major sell signal, so we have a lot of selling coming into the Swiss and a lot of selling coming into the yen. So the yen and the Swiss are the two primary sell signals, or the two primary currencies that we should be looking at selling, and the dollar and the euro are the two primary currencies that we should be looking at buying, and then we should be also looking at buying the Australian dollar. Okay, so that is the essence of our portfolio selection. We'll be looking at buying the dollar, the euro, and then third will be the Aussie, and we'll be looking to sell the Japanese yen and the Swiss franc primarily, and then the next choice in us to go short would be the British pound. Okay, so let me save this recording, and then we're going to start doing each currency by itself.